The US dollar index settled at the levels recorded at the beginning of the year amid the Fed's comments. The regulator announced its intention to go on raising the key rate and to keep it at the peak for a long time. The Federal Reserve will have to take such a decision amid numerous macroeconomic reports, which may prove that inflation is still growing. In our video review, we will find out what publications in the first part of the week may intensify such expectations and affect the major currencies. A flow of important macroeconomic information will begin on Monday. Thus, Canada will provide data on its business activity. The indicator is calculated by experts at IVEY and reflects monthly fluctuations in economic activity. The data is provided by a group of purchasing managers from across Canada. In January, the indicator unexpectedly jumped to 60 points instead of falling to 42 points. Now, analysts suppose that business activity may contract to 55 points in February. On a Tuesday, traders will be waiting for positive data from China. Recently, macroeconomic reports from the country have been encouraging investors. The economy is recovering after a long-lasting period of restrictions. On March 7th, traders will get information about a possible rise in the China's trade balance. Notably, both exports and imports may continue sliding on a yearly basis. However, expectations of improvements in the world's largest economy may revive the appetite for risk assets. For example, the Australian dollar has every chance to gain in value. The currency may also rise amid domestic news. In the Reserve Bank of Australia raises the key rate, and the regulator is expected to raise the benchmark rate by 25 basis points. The RBA has to take such measures in an attempt to slacken the growing inflation and return it to the range of 2 and 3% per annum. The central bank is taking caution steps not to damage the local economy. This attempt to keep the balance may cost a lot. However, on Tuesday, the Australian dollar may recoup some of its losses against the US dollar. During the US trade, Fed Chair Jerome Powell will provide a speech. Notably, he will also comment on the situation on Wednesday. The next 2 weeks are expected to be calm ahead of the FOMC meeting. In this light, traders will be very attentive to every word that Jerome Powell will say. They will try to find hints about a future key rate decision. From the beginning of the week, traders will be getting ready for the publication of the US employment data slated for Friday. On Wednesday, experts at ADP will disclose the non-farm employment report. According to the forecast, the number of jobs may add 185,000. Notably, in the previous period, ADP had anticipated an insignificant rise. However, the official figures from the US Labor Department turned out to be 5 times higher. It's not a 5% difference. The official report showed that the number of jobs in the non-farm sector surged by 517,000, and such differences may force traders to ignore this data. Meanwhile, investors are likely to focus on the results of the Bank of Canada meeting. According to the forecast, the regulator will take a pause and keep the key interest rate at the current levels. Although inflation in Canada remains high, it's manifesting a stable slowdown. And at the same time, economists express concerns about economic stagnation. Thus, the pause in monetary policy tightening is quite reasonable. It's needed to support the economy. Against the backdrop, the Canadian dollar may slide against the greenback. and we will monitor the market reaction to the above-mentioned reports. Subscribe to our channel and follow changes in the market sentiment with us. Any comments, questions and offers are welcomed. We wish you profitable trading and see you soon.